Hi, members. In part two of the Commercial Mortgage Broker Overview, we'll look at the commercial lending market, what makes commercial different, and other aspects of the CMB position with more emphasis on selling our services. Let's go. The learning objectives for part two of this lesson are to help you understand the fundamentals of the commercial mortgage market and the five key differences of commercial versus residential mortgage brokering. As a commercial mortgage broker, you'll be at the heart of the commercial real estate lending market, guiding investors and businesses towards their financing goals. Let's discuss four key reasons why this business is very worthwhile. The number one reason is demand, and it's huge. In 2024, 929 billion in commercial loans came due, which is 20% of the 4.7 trillion in outstanding mortgages. The value of all commercial real estate is estimated at $16 trillion. Dollars. Most commercial mortgages are on a 3, 5, 7, or 10-year term, which is why typically 20 to 25% of mortgages need to be refinanced every year. That's a lot of refis. This does not include the multi billion-dollar single family residential rental and rehab market, new construction, or other underserved markets. Think about that for a second. You've got 20%, 25% of the market has to get refied every year. That means those borrowers have to reprice those loans. They have to readjust the new loans based on current interest rates at the time of the refi. They have to factor in how much longer are they going to live there, operate out of that property, how much longer they're going to own it. What is the state of the current occupancy, the leases? What's the cash flow look like? There's a lot of moving parts that can change over the course of the last 5 years when they first got that loan done. So that's a lot of service and a lot of help they're going to need with, which is why once you find residential loan brokers come over to the commercial side, they rarely go back because you have a built-in market that has to refi on a regular basis. And that does not include new construction, that doesn't include purchases of new property, which then get put on that constant refi cycle. So there's a tremendous opportunity on this marketplace. This is why we need your help, why we need you guys to join us in this endeavor. Let's discuss three more reasons this business is highly desirable. Number one, there's fewer CMBs compared to residential loan officers. Two, it's a lucrative field with high earning potential. We talked about that before. And then three, after you've mastered brokering, you can move up to lending. Start your own separate 506 debt fund that funds your loans and those of other lenders. And you can get into doing large scale capital projects. World is your oyster at that point. To help you better understand the process, let's dive into five key differences between commercial versus residential lending. The first difference is in your client avatar or ideal client profile. Investors and small business owners are your target market, not the general public. At the beginning of your career, however, I would recommend sticking with real estate investors exclusively because they are easier to qualify for financing and they are plentiful. The second difference is deal acquisition. Target marketing is the most viable option versus mass marketing, which will waste your time and your money. You'll target specific investors through strategic marketing efforts rather than relying on mass marketing campaigns. Every campaign should reinforce your authority as an expert in this space. A third and big difference in commercial lending from residential is the loan process itself. There is no algorithm in commercial. Every deal is a manual underwrite. Unlike residential lending, commercial loans are manually underwritten, allowing for more flexibility and customization. The fourth difference is in the underwriting itself. There's much more emphasis on the property versus the borrower. In commercial lending, The property plays a much more significant role in the underwriting process compared to the borrower's personal financial situation. Things like location, the local market conditions, the net operating income, occupancy, overall property condition, amongst other factors, weigh heavily in the underwriting decision. The fifth and last difference between commercial and residential is in the loan products. Commercial loan products offer a wide range of options not seen in residential, including non recourse options, shorter terms, 3, 5, 7 year terms are typical, balloon payments, and prepayment penalties are all the norm in commercial. Now, in a later video, we're going to go more in depth into the details of these loan products. But for now, the key essential thing to understand is with all these differences, is there are significant differences between residential and commercial. And a lot of times, your clients, especially the ones that are going to be seeking your help, don't understand these differences. So you'll need to internalize everything that we've talked about here because when they get involved with you on their first commercial deal or even second or third, they may not be expecting these things. So it's up to you to educate them, to bring them up to speed, and let them know the differences that seem new to them. This is typical in commercial, and this is just part of the learning process for them. You helping walk them through as part of their education process so that they'll become a more effective investor by working with you. Let's recap the key takeaways of part two of the overview. Let's state the obvious. Investors need the money, but the CRE market needs our service. There are billions of dollars of deals that need our help. Commercial is distinct from residential in many ways, and being aware of those distinctions can help you position yourself better with your target client. Join us in Mortgage Broker Mastery. Learn from the best in the industry. Together, we'll help you achieve your financial goals and make a real impact in the world of commercial lending.